Welcome in, everybody. This is your host, Mystic Rick, and every week on this channel, we do things from technical analysis to project reviews to updates on the news and the market. And so, without further ado, let's dive in and see what's going on. Right now, I have the Bitcoin chart up for you, and this is the daily. And so, one of the things I want to talk about that seems very interesting that no one may be looking at in terms of from a what's the word, from outside the box, right? So right here on a macro level, we are uh, forming a massive um, head and shoulders. Okay, now it could be nothing, but I think it's something to pay attention to. Now, typically, what you'll see with a head and shoulders, and I'm not saying that this is, going to happen, right? Not saying that that's going to happen, but um, even if I just take a modest level, right? You take it to the neckline, and we measure this out. Okay, that would give us a target of about $20,374. Now, that's just being modest. Okay, um, if we were to actually just take a full size, um, measure it from the base of the actual trend. Okay, so we could actually measure it from the base of the start of the trend, and that would give us a target price of around 9,100. Now, do I think it's going to go that low? Obviously not. Now, if we look at our current price right now, we're sitting at 35,896. And what I'll do is I'll actually turn on the RSI for you guys, so you can see why we had the bounce that we did, and it'll think it'll make sense to you. Okay, let's change this background. That just looks gross. Okay, and then we'll make the 30 green, and we'll make the 70 red. There we go. All right. So if we're looking at the RSI, okay, what this measures is whenever Bitcoin is considered overbought or oversold. Okay, so on the daily, the last time we were oversold was on March 13th. Okay, and we were still in an upwards trend at that point. Since then, we've only touched or went under over, or excuse me, that was overbought. Excuse me, oversold. We have only touched or went under the 30% range on April 25th, and then on May 19th and May 23rd. Okay. However, what do you see here? A double bottom and an immediate pump after the double bottom. Now, was the pump a lot? No. Um, but look where we are right here. Okay, we're floating right in the middle right now at about 43 on the RSI. Okay, 43.09. And what that means is that if we go up, there's lots of room here for a pump on RSI. If we go down, there's still room here for the RSI on the daily to not be oversold. And as you see, it can go below it. And if you move the chart to look back at the last time we went below, I mean, it was way back during the pandemic crash. Okay, we dropped as low as 15 on the RSI. So that's just one thing to be able to understand. Okay, when you see a double top like this, it's normally going to be followed by a crash, which is the crash you see right here. And I can circle that for you right there. Okay, can you guys see that? Right. So we have the no, I don't want text. I want the brush. There we go. We have um, this double top right here. Okay, and then this. Okay, so that forms a double top, and then look right up here. Boom, crash. Okay, over here. This RSI thing is in the way. Okay, actually, I'll just circle it. That'll make it a lot easier for you guys. Over here, we had a double top, and then a crash that followed. Okay, so that's definitely something to consider. And right now on the RSI, we have formed a higher high. Okay, we have a higher high, so we have a trend that has been started here. Okay, but until we break through that channel right there, jeez, until we break through that channel, and I could even move this here. Okay, as you guys can see, um, the RSI is, it's basically trapped in a wedge right now. And so if we can break above this on the RSI, I think we would see a, you know, a 10 to 15 to 25% pump on Bitcoin. If we break below this, we are going to see um, another crash. Now, if we go ahead and hide our RSI and we look back at price action, and let's turn on the Keltner channel. Now, one of the things I talked about, if you watch my previous videos, is if you look back during the front side of a bull run, historically, we have shot through the top of the Keltner, and then the bottom was resistance. So I'll mark those out for you. We uh, we shot through the top, the bottom was resistance, and then we shot through the top, and then the bottom was resistance. Through the top, resistance. Through the top, and then that's when we see the trend change right here. Okay, now we're busting through the bottom, bouncing off the top is resistance. Through the bottom, top is resistance. Now we have busted through the bottom, but how much farther will we go? I mean, look at all this price action right here, right? Okay, all this price action is days and days, all right? That's over 2 weeks of going through the bottom. So um, let's take all these drawings off of here. So if we were to just take a measurement of the drop we had starting at the bottom of the channel when we busted through on that last breakthrough was a 42%. Okay, so if we measured out another 42% loss from where we currently are, okay, that would put us at that 20,000 range that I spoke of. Okay, think that's coincidence? I think not. Now, does that make me a bear? No. Does it make me a bull? No. Okay, on this channel, I'm just going to hit you guys with a dose of the truth. not the bull crap if you've been shilled on certain channels. Okay, hit you with the truth. No, Bitcoin is not going to 100K in 30 days. Okay, just stop it. Okay, at some point, especially because people's livelihoods are on the line, you have to be realistic. So stop listening to stuff like Doge to $5, um, or ETH to $50,000. Okay, Ethereum's not going to $50,000 this summer. Sorry, it's not going to happen. Okay, Bitcoin is not going to $300,000 in July. Sorry, it's not going to happen. So, um, and if you want verification of that, we can actually we can come back to the 2017-2018 run. Okay, here we go again. So we have our trend where we bounced off the bottom and shot through the top, bounced off the bottom, and look at all this action of through the top. Okay, and then we had our trend change. Okay, we busted through the bottom, the top became resistance. Busted through the bottom, the top became resistance, and that was a double top. And then we bounced through the bottom. Okay, so can't make this stuff up, guys. Right? But again, on this channel, you're gonna get hit with a dose of reality. Okay, I know some of you are moon boys or moon girls, and that's fine and dandy. Be however you want to be, but on this channel, you're gonna get hit with a dose of reality. Now, something else I want to show you. If we look at the 4-hour time frame, okay, if you look at the 4-hour time frame, we have just formed a head and shoulders. Take the measurement to the neckline, and that give us an approximate 30,099. Okay, uh, which on Bitstamp, that would be about $30 away from um, this low that you guys see over here, which was 30,066. God, that drawing's ugly. You have to pardon my drawing skills on here. Still learning how to draw on this thing. Okay. Uh, we don't have a, I mean, we do have a trend we could draw here. Okay. Um, and we can move that up just a little bit. Okay. So if we zoom in on that, that puts us in interesting territory. Okay. So on the 4-hour, until we break above 36.3, 36.5, I wouldn't consider the 4-hour bullish. Okay, what we've seen is we've come up to this trend line and we've bounced right off of it. Okay, we've bounced right off of it. And here we are, and I think we're going to bounce right off of it again. And we'll just have to see what happens from there. Okay, and then for those of you who love the hourly, we just had a V-shaped recovery from that latest dump. But again, we could also, um, I don't consider that spike. We can also draw a trend line here. Well, the latest trend. Okay, so we have pretty much gone above it on the hourly, but uh, that's only action for a couple hours to come. Now, what I would watch out for is if we're going to form a head and a shoulder over here, which would be bullish divergence. Okay. But if we go back to the daily, for those who don't understand what the death cross is, I'll show that to you. Okay. The death cross is when the 50-day moving average, which is the yellow, crosses below the 200-day moving average, which is the red. Now the projected path I see with the 200 moving average is something like this, and I see the we can change that color. Okay, and I see the 50-day moving average doing something like this. Okay, now historically, until it starts to chop sideways, when a bull run has ended, what has Bitcoin done? Okay, it just does something like this below the 50. Okay, until eventually, coming sideways, and then the 50 comes back to the 200. You have a golden cross, and then you'll have a pump to the upside. Okay, so think of this as like a long, elongated accumulation phase. All right. So think of that as elongated accumulation phase. Now, what we could also see is, we'll remove that one and this one. What we could also see is something like this, okay? And then an upward action, okay? But in order for a massive move to happen, this 200 day would have to cross below the 50 moving day again, okay? You're not going to have that pump to your 300K moon boys without that golden cross. Sorry, it's not going to happen. So ultimately, what I see is right now this is the mountain of complacency. And what always comes after a mountain of complacency? Dump to the downside. Okay? That's what you see after a mountain of complacency. So this right here is your death cross. Okay? That's your death cross. And because it's a lagging indicator, this action right here is the result of the death cross that happens right here. Goodness, that's an ugly arrow. Okay? The result of the action that happened here. So yes, your indicator is it's a lagging indicator. Okay? But that's definitely something that you guys want to look at, is look at the trend change. Okay? And we can look at that again. If you look at this entire bull run, where have we remained? Up until after the peak, above the 50-day moving average. We came up above it again for a retest, just to dump right back below it. And now, as of May 19th, we below the 50-day and the 200-day moving averages. Now, what a lot of these technical analysts out there aren't going to tell you when they say, oh, well, death cross doesn't mean anything. Death cross doesn't mean anything. It does when you have a major separation of your 50-day, let's get rid of that, of your 50-day and your 200-day, okay? When you have mass separation like this, yes, a death cross is significant, So stop letting them lie to you. Okay. The reason why all of this action here is not significant is I'll explain to you why. Okay. This right here is the pandemic crash. Okay. Coming all the way down to 3850. So because it is not naturally happening, I'll explain to you, you know, why this is, that death cross was insignificant. Excuse me, I didn't draw that correctly. This action, okay? So you have a golden cross followed by a death cross, lagging, so it was caused by this pandemic crash, and then another golden cross. Measuring that all happening in 92 days. We will not have a 92-day golden cross, death cross, golden cross out of this bull run. Now, let's look at the death cross here. Okay. That death cross took place on 25 October, and everyone tries to fool you and say, well, when that death cross happened, there was a pump to the upside. But what did I just tell you? This is when the death cross happened. Okay. Excuse my drawing. Okay. This is when the death cross happened. This is taking place after the fact. Okay, remember the indicator is lagging. So this action right here on the moving averages actually happened here. Okay, so it's just a little magic trick that they're throwing out there for you to make you think that there is no heinous dump after a death cross. But let's look at the significant dump action if you want to take it from the top. Okay, and measure out that we dropped over the course 53 days later a total of 37%. If you want to add in a pandemic crash, then it was a total of 62.77%. Again, why did we see this downward action into a bear market after the 2019 pump? Look at the separation of the 50-day and the 200-day. Again, we can go back to the 2018 bull run. Okay, look at the separation of the 50-day and the 200-day. Death cross happens here. The action of the death cross was actually here. Oops. So if you want to take how far we fell after that death cross, it was, and we could take the localized high. Okay, we won't have to do the all-time high. From the localized high to the bottom of that bear market, it took 284 days to find true bottom with a loss of 73%. And that's just from the localized bottom. If you want to take actually the drop from the all-time high, you have 364 days for a total of about 84%. Now, if you want to take the localized high and look at how long it took to reach above that localized all-time high again, was 477 days. Okay, 477 days. Stop letting some of these gurus lie to you. Okay, so when they say, oh well, we're not, we're not in a bear market if we're setting higher highs, it's a mirage they're throwing in your face. It's a mirage you're throwing in your face. Because guess what? What was this? A higher high. And then another higher high. Was that a bull market? No. Okay. It wasn't. You have a higher high here. Was it a bull market? No. You have a higher high here. Was it a bull market? No. Okay. These are what you call, take that out, are what you call a relief rally. Okay. This was a relief rally. The bull run was already over once you, this was the first dump that said, hey, warning shots fired. The second dump was a warning shot fired. The third dump was a warning shot fired. If you bought into this, you probably got wrecked. Why? There was clear bullish divergence there to show you otherwise, that you were going to get wrecked, or bearish divergence. Look at this. Bearish divergence showed that you were going to get wrecked. Bearish divergence showed you were going to get wrecked. Bearish divergence showed you were going to get wrecked. Bearish divergence showed you were going to get wrecked. Bearish divergence showing you were going to get wrecked. Need I say more? Stop letting some of these gurus lie to you. Okay? But in this channel, I'm just gonna tell you the truth, whether you want to hear it or not. Okay? And for those moon boys hopping on the channel saying, "Oh, well, you know, you're such a bear, and you did." No, I'm not a bear, and no, I'm not a bull. I'm on the side of the truth. I'd rather be on the right side than trying to be on the winning side or the losing side. Okay? So I'd be very cautious of this action going on right here. Okay? Because a decision is going to get made. A decision is going to get made. I would be watching out for this macro head and shoulders that nobody's paying attention to on the daily. Okay, I would be watching out for that. So if we fib this thing out, um, and let's say we want to take this bottom and fib it up here. Okay, now I want to show you guys what significant ranges we have here. Okay, and what I'll do is I'll actually draw some trend line. I'll draw some lines out for you so we can remove the tool so you can see them easier. All right. Okay, then we can take our fib. So I want you to look at this. Why this is significant on a daily scale or the daily time frame is look at all this confluence that's happening right in here. We'll make this yellow so you guys can see that. Okay, look at all the confluence that's happening around here. This is a battle of the bears and the bulls fighting over this 37 or 35 to 37K range, like little children on a schoolyard. Okay, the last time we have tested the 43K range was all the way back on May 19th. Here we are a whole month later, and we've not been able to get up to test above 42K. I want you to think of how significant that is. All of this screams complacency before the next dump. Okay, It screams complacency before the next dump. That's what it does. Again, right now, you could potentially draw a trend line right here. Okay, you could. And again, if you break above into that 36K, 35K area, then there's discussion for a bullish pump. But where's it going to go? The reason why I say where's it going to go, because you have all this confluence right here. So if it continues getting rejected off of this trend, the 30,000 to 31,000 region will get tested again. And every time we test that region, okay, one test, two test, three test, where's it going to be? Could it be out here somewhere? Yeah, it could. Could we come up and test 42K in that area? Yes, we could. Okay, we could see something like this. We really could. Okay, where we go up, we test, we come down. We go up, we test, and we come down. However, the confluence here says that's not going to happen. Okay, I am telling you right now. And if you look at this time frame, this would take us, you see what, May to June, so to July, August, September. I can tell you right now, by September, we will not still be fighting this same confluence here. A decision is going to be made. The war of the bears and the bulls is ensuing right now. And being that the death crosses just happened and these RSIs are about to split ways, I'm telling you right now, 3 specific levels to watch out for. I watch out for the 30,000 range between now and July 1st. Okay? The 30,000 range between now and July 1st. Then I'd watch for the 25K range between July 1st and July 15th. And then after that, I'd watch for the 20,000 range between July 15th and August 1st. And the reason why that is significant to me is because what's hanging out right down here, a big CME gap. Okay, a big CME gap. So I would definitely watch out for that action, because there is a large there's a CME gap. I want to say it's like 18,900. So something to definitely watch out for, guys and gals. All I can tell you right now is don't get caught in the battle of the bears and the bulls right now. Stay out of it. Let them do their thing so that you don't get wrecked. Okay? That you don't get wrecked. Everybody that fooled you into oh, we're still super bullish. I hope you didn't have a long open here because you got destroyed. Look at all this confluence. Imagine going long because you're like, here we go. They said Bitcoin's about to go to 75K, and then you get wrecked right in here. And then another rally, and then they say, oh, well, we're going to 50K. Here we go. And then you get wrecked. So the smartest decision right now is take your profits, stay out of the fight, and save yourself some heartache, okay? Because I can tell you right now, everyone that's screaming 100K by July 1st, everyone that's screaming 100K by August 1st, maybe you should look back at how much Bitcoin they have and what they have to profit by telling you that it's going to those prices, because then guess what all their followers do? Run to buy Bitcoin. Let's not be stupid here. You rushing to buy Bitcoin fills their pockets. You know why everybody lost up here in this region? Because that's what's called dumb money. It's so much liquidity trapped up in here. It's dumb money. That's what they wanted you to buy in at. That's what institutions wanted you to buy in at. That's what corporations wanted you to buy in at. Why? Because all the money made off of these heinous dumps. Okay. Back in here. Okay. This action right here, over 100 million, or excuse me, a million people for almost $10 billion in liquidations. What does that tell you? Stop listening to these moon boys and moon girls. Have a freaking brain of your own. Okay. Will Bitcoin hit 100K eventually? Yes. Yes, it will. Okay. But you're talking a trajectory that it's going to look, something like this. Okay. Bitcoin is not doing this. All right. It's not doing this. It's not going to do this. It's not going to do that. Okay. We're going to go through a bear market reaccumulation, and then you're going to see it slowly get back up there. And then eventually we will hit 100K, 200K, 300K. Stop listening that 100K is coming like this, or that it's coming like this. That is not going to happen. Okay. Look at how I drew this now. Look at how far this bull run went. Okay. It's been over a year since the halving. Bitcoin is not doing this. It's not doing this. It's not doing this. It's not doing this. Expect something like what I just drew you. So that's all I have for you guys today for a Bitcoin analysis. Next time we get on, we'll go through, uh, some Ethereum, some altcoins. We'll look at some market dominance, things like that. But that's all I have. Guys, make sure you hit the like and subscribe button. Please share my content. If you want more truths, if you want to know more deep in of the technical analysis, the things you're not going to learn on other channels, then just comment below. Keep it going. I'd like more. Thanks, guys, and have a great one.